Okay, hello everyone and welcome back. My name is Greg Furman and this is the Vantage Point AI Market Outlook for the week of May the 20th, 2024. Now, to get started this week, we'll begin with the US dollar index where we usually do. Now, what I had discussed last week was obviously the Fed needs to hike and raise rates. That's not what was stated. What was stated is there is no pathway to any further hikes in 2024. What we're looking at is either higher for longer or rate cuts. My argument is that cuts are coming and the data continues to support that. So again, fully cognizant of the fact that the Fed has to hike and cut, but again, that's not what we're looking at here. We're only of the two options for 2024, in my respectful opinion, and that is the point that I've made. So when we look at this right now, the dollar is again responding to that softer inflation data, specifically the CPI. Our T-cross long for next week is going to be 105.12, but once again, the quarterly opening price really is the level we want to keep an eye on, 104.49. If we can hold below this level, then that would signal the dollar is heading lower. Now, again, the Fed is speaking again next week, but he too has said this week that he will not be hiking in 2024. So again, when we take that into consideration, that should keep the dollar under pressure until the beginning of the month, where we get back into that normal dollar cycle of buying of dollars for usually 3, 4, 5 days. So our predicted difference is down, predicted RSI is pretty much flat, and we're firmly below 105.12. Now, this is giving gold a boost. So once again, we're approaching a very strong level up here, and these verified zones come in at or about the 24-27 area. But as I discussed in last week's outlook, my upside target for the month of May is 24.78, and I'll still be surprised if we get there, but we absolutely could. So for now, and that again, that weaker dollar, softer inflation data, that should fuel additional gold longs. Our T-cross long, that will be coming in at 23.47. That's our main support level, providing we're holding above that. But you can see that I've got the yearly opening price at 2066, then we're coming into the quarterly at 2235, and of course the monthly, very important level, which we've been discussing over the last several weeks. We were simply waiting for a break of the T-cross long. So all these levels look pretty good, but I will give everybody that same warning I did last week that be careful up here, because we could see some gold sellers, at least in the short term, come out as that seasonality starts to unwind. Now, the obviously the asset class that is really benefiting from the dollar, the data out of the U.S. is of course Bitcoin, making another big move up here, closing the week at almost 67,000. Very likely a break of that current quarterly opening price. That's coming in at about 70,885. I anticipate we will see a break of that level, but maybe not in next week. But I do believe it's coming. So the key level you want to watch here, 63,404. And of course, this very, very important monthly opening price, just a little bit lower. That's coming in at 59,840. Now, as we look at the equity markets responding very well globally to the Fed being backed into a corner on these basically even higher for longer, it's going to be difficult to make that argument going forward, but I'm sure he'll try. But when we look at this right now, we do have a breakout. My concern here is this a true breakout, or is it a bull trap? Because again, just because that data is softer on the CPI and the economy is slowing in the US to some degree, a recession would not necessarily benefit stocks. It would again benefit gold. So when we look at this right now, we are above some key levels, but our T-cross long 51.98, that's our retracement point, but the quarterly opening price here sitting at 52, 57.97. Keep a very, very close eye on that particular area. My concern right now, looking at the predictive indicators in Vantage Point, the medium-term predicted difference is starting to move lower, meaning that uptrend is losing momentum. So we should keep that in mind. And if we can't hold above that breakout point, then deeper correction could be in the cards. Now, once again, we want to make sure that when we're looking at all of these markets that we're really taking a look at them globally. So I do like to bring up the VIX because once again, the VIX is also a significant player here. So when I look at the level right now, we're starting to basically have some problems up here, which I'm surprised at 18,845, but we're holding firmly above the quarterly opening and the T-cross long. So for next week, our T-cross long 18,432. That's the big level, but in this particular, in the DAX, in the European equities, this is clearly showing some weakness. So the way we would look at this, guys, is we would say, okay, is it possible this could affect the US also? And in my view, yes, it could. So we'll watch this carefully, but if the DAX continues to slide, then we should expect some kind of corrective move, if nothing else, on the S&P 500. Now, the VIX, once again, is starting to bottom out here. We're running sideways on the predictive indicators from VantagePoint. Neural index is still down. I'm looking for some form of a bottom here, and we don't have it quite yet. So watch the VIX very, very carefully next week. We can click on our F8 in this particular case. And 1415 is the first major resistance level. You're going to look to see if we break that. If it does, then more likely than not, the equities are going to struggle a bit here, and that would favor Bitcoin potentially, and more so gold. So we'll watch that very carefully, but the indicators are losing downward momentum on the VIX, which could mean we could be looking at a global corrective move on some of the equity markets. Now, once again, when we come into some of our other main commodity, which of course is light sweet crude oil, in my respectful opinion only, it does look like we are starting to form a pretty strong bottom here. And that low is coming in at 76.36. That is my monthly projected low for the month of May. We're starting to rise. So if you do like the idea of a long on light sweet crude, I would respectfully submit you should keep an eye on your oil ETFs, oil stocks, some of these things, because this is pointing towards momentum is building here. We've got our predicted differences starting to break above the zero line. We've got momentum by a break of the 60 level on the predicted RSI. And again, that neural index strength is a little bit concerning why it's flattening out like that. But I suspect it will straighten itself and start pointing back to the upside once we clear the T-cross long, and that's coming in at 79.63. This is the big area, guys. We break above that, we're going to be targeting 81.17, 82.85, and then ultimately, I suspect we will be targeting back towards this 87 level, but maybe not until next month. Now, as we look at some of our main Forex pairs, providing that dollar continues to slide, the euro should extend higher, but I do want to bring it to everybody's attention that the euro has never been in an uptrend in the calendar year, and it's not necessarily in one now. We are still negative on the calendar year, 110.38. The indicators on VantagePoint are starting to get a little bit toppy here. So again, be cautious up here. In my respectful opinion, we have a verified resistance high that's coming in at 108.85, and you can see that that's exactly where we have failed all week. So a corrective move is likely. 107.82, I would be more comfortable buying down into this region. Because again, 107.82 is a bigger level for us, but still at a good strong close at 108.70. But again, that we're about 100 pips away from the T-cross long, and that's I think right now where I would be a little bit more comfortable, executing new longs. Now, with the US Swiss franc, it's holding in there, guys, but once again, if the dollar turns to the downside, this pair will move lower. So we're holding below our monthly opening price, but the indicators are still, you can see the neural index strength and the predicted RSI very rarely have the exact same signal, but they do. So again, this is warning of some pending dollar strength. It may not be a big run of dollar strength, likely just corrective, but we'll watch that quarterly opening price on the dollar index just to make sure we get below that. But if we don't, then we could retrace higher up to the 91.95 area where we would be sellers anyway. Now, when we look at the British pound US dollar, it's had a very, very good week. But once again, I will draw it to all the Forex traders' attention that the yearly opening price 127.32. Once we overtake that and close above that 2 days in a row, we should have a very clean run, much higher on this pair, but we have to get above that hurdle of 127.32. The indicators are suggesting we could be correcting first, so we'll use our T cross long 125.73, and all the way down to 124, about the 124.92 area. I would still be looking at longs on this particular pair. Now, the dollar yen, once again, the dollar yen just kind of moving sideways in a channel here now. The low end of that channel is going to come in at 153.06, and the immediate top side is going to be about 170.99. I'm looking for a break of either one of these levels, but I suspect it's going to be to the downside because of the potential of the interest rate differential changing between the Fed and the Bank of Japan. I don't think it's going to change overnight, guys, but I do think it's going to change going forward. So I believe the next bigger move on this pair will be to the downside. Now, when we look at U.S. Canada, just a reminder, guys, it's a holiday in Canada on Monday, so don't take the price on this pair seriously on Monday or on light sweet crude oil, because again, those markets are going to be a little thin. So right now, I do believe that oil is ultimately moving higher in the months ahead. That should push the US Canadian pair lower. The biggest fundamental risk we have is the Bank of Canada. I'm also pretty confident they're going to cut based on the Canadian economy. So if that happens, it will initially hurt the Canadian dollar, but I believe that this has already been priced in, and the next move is going to be down. We just have to have a little bit of a corrective move, and we could hit back in to the 137.78 area. It's possible here, but I think it's unlikely because we have to clear the T cross long and close above that level to even think about going long on this pair again. Now, for next week, I can tell everybody, much like what I showed you last week, on a monthly basis, it's not always about looking at one time frame here, guys. If we look at the Aussie US over the last 3 months, which I talked about last week, we've got very significant resistance that finally appears to have broken, and that the top end of that is sitting at or about the 66, 67 area. So this could be a false break here, but I don't think so. I think the dollar is getting ready to ultimately move lower, but the Aussie too, 68.12, that's the yearly opening price, and we need to get above that in the next month or so. And I would prefer it in the next couple of weeks, but if we can get back up above that, then we should start to see a broader dollar weakness. You're not going to see anything really much different with New Zealand US, the same pair. Both are holding above their T cross long, but I think a corrective move on both first, and then ultimately both these pairs go higher. So with that said, this is the Vantage Point AI Market Outlook for the week of May the 20th, 2020.